Hello, Maverick traders. Welcome out to your market roundup March 10th. And what a day it was today. We're going to talk about meaningful news. We're going to talk about why sectors were getting hit and some were a little bit more stable. And we're going to always highlight our very best ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was obviously very ugly. As you look at the major indexes, Dow down 2, S&P almost down 3, NASDAQ down 4, small caps down 2.5, gold and oil both down. So there was nowhere really to hide. And this was one of those just kind of indiscriminate selling most everything. Markets were slammed. There's continued fear that these tariffs are going to create a slowdown in growth. And look, stocks are priced very expensively on a historical basis. There's a lot of room for some downside. There's way too much built-in optimism and so on. And so there was a little bit of a pocket there underneath the markets, and you're seeing what can happen. And I would anticipate that, look, I mean, this is only a 6% decline. If this is something that you think is really significant, it's just not. You'll see 10% plus declines most every calendar year. So to have a 10%, which is still another 4 off of the highs, would be kind of a standard normal type of occurrence, at least happening on most years at least once a year. So we haven't seen anything yet. I mean, this thing could grow to down 15, down 20 very easily. Tesla plunged another 15%, its largest drop in 5 years for a single day. And look, Tesla's been down week after week after week, and it's the ultimate growth stock. Advanced decline line down 80% of stocks declining, and the 50-period moving average shows the bearish market environment with 71% of stocks in a downward trend. So not to keep harping on it, but we talked about when this happened, which was a couple of weeks ago, that false breakout, that things can really intensify. And that's why, when you spot a false breakout and the subsequent reversal, there's an opportunity there. Well, we've really slid to the downside. We've now broken this support level. At some point, you'll find a bottom, but you don't want to predict if and when that's going to happen. You kind of wait, and you'll know it when you see it. And usually it'll be continued selling, and then sort of a capitulation day, a day where everyone throws in the towel. This had a little bit of that with a pickup in volume, but I don't think it really had the full inner workings. When prices are falling like this, remember that a lot of the selling that comes in late in the selling mode is forced liquidations, people that were leveraged up massively on margins and so forth. So I would still say, look, there could be more flush out, more downside. You get into a dangerous game if you just sit here and hope for a bottom, because it is not out of the question that this 5,600 number will grow to 5,200 or something before the short-term bottom is in. So there can be a lot more decline than what we've seen so far in the very short term. Look at the NASDAQ, plunged, and you'd say, well, isn't it getting to an oversold condition? Well, this is why when an RSI first gets overbought or oversold, it actually usually goes further and faster. So the RSIs being below 30 and just breaking below 30 and so on actually leads me to believe there's more violence, more downside potential. The NASDAQ had a little bit more of the characteristics of a flush out, but I would expect it's probably still a couple of days away. It's probably going to happen at lower prices. And the day we hit the bottom, I would bet, usually the volume would be about twice the average. So if you said the average was maybe a little lower than that, maybe here's kind of the average, you'll probably have a volume bar that looks like this. And you'll probably have a big capitulatory downside washout, and then we can finally get a little bit of a bounce. But it's going to be ugly for a while. Utilities very much in the green, energy very much in the green, but that's pretty much it. I mean, everything else is just widespread, and anything growth related, like we said, Tesla, I mean, it's the ultimate type of growth stock where you're just hoping that it will grow into its valuation through enormous growth in the future. But look, Google was down 5%, Apple, Nvidia, it was widespread selling in the most popular names out there. So, as far as market outlook, we can get little bounces. I mean, a bounce of a day or two, but you're probably not going to have a real tradable bottom here for a little bit of time. And when I say a tradable bottom, I mean one that can bounce for a couple of weeks. I think we're still a couple of days away from that, probably a little bit bigger flush to the downside before that happens. But there are some stocks still holding up well, Berkshire and Alibaba and Dollar General, and we'll look at some bearish candidates as well. So on the bull list, Berkshire Hathaway actually had a bullish engulfing, a reversal formation. It's only a touch off of the all-time highs, standard kind of bull pullback. I'm not in a rush to buy anything, but if I were going to buy something, it should look like this. Relative strength characteristics, still at maintaining its upward trend and bucking the trend overall of the market and its sector. Dollar General, same thing. It's been rallying on volume the last few days. Will it get pulled back a little bit with the market? Probably so, but those dips can be buying opportunities. Look at candidates that have those signs of real relative strength as being bullish candidates. And then on the bear list, look for things that maybe are just starting to break down, like FCX here, breaking below some support on upticks in volume. Classic kind of descending triangular type of pattern, right? It's the old bouncing ball effect where the bigger bounces, subsequent smaller bounces, and then the breakdown seems to be happening here. Or Google just has been in a downtrend, had a recent rally, a bear rally short setup, and we've pivoted over again. Lighter volume on the way up, heavier volume on the way down. I'd still expect lower prices are incoming for Google. So the VIX has hit multi-month highs, which means there's a lot of fear coming in, but it's not something that just because you hope it turns. Look, I really think too many people are caught on the wrong side of this. They're trapped, and it's the twisting of the arm. It's just finding the pain point, and the bulls are in pain, and they have to scream out and say, "Uncle, I can't take the pain anymore, no mas," that sort of thing. And so watch for a little bit of a flush out, a little bit of a signal. But today was a little bit of that, but usually it's like one day's move, and then it gets worse and worse when you're in this type of dynamic. And so the next couple of days could get really ugly. That's what I would actually watch for, is kind of being that full flush out, that full max pain has been reached, and then we can set a little bit of a bottoming point. CPI comes out on Wednesday. Tomorrow we've got earnings from Sienna, Dick's Sporting Goods, NIO, and some others later on in the week. I hope you enjoyed the market roundup. Have a great week, everyone. Good position sizing, good risk management are critical at times like this. We'll see you next time.